Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're back here on YouTube and we're going to be looking at Bitcoin today. It's been a volatile few days. It's almost as though we've been reminded that we're trading a 70 vol or 80 vol asset, right? Which is what we've always been trading the whole time it's existed. Never ceases to amaze me how people get surprised by that though, but there you go. I'm here at what is now 5:30 in the morning recording this. I've actually been up since 1:30, couldn't get back to sleep. My phone went off and dragged me out of bed to go and look at the screens because a buy order on Bitcoin got hit at 80k and every goddamn sentiment indicator and notification that could go off was going off telling me that it was the end of the world. So I don't believe it is the end of the world, just to be clear. But yeah, I had a buy order go off on the 50 fib retracement between the August 24 low and the Jan 25 high. I think it was pretty much 80k. I was looking at a round number. So I'm buying down here, buying the fear, and there's a lot of it. There's a lot of fear. So that's what I want to talk about first. I want to talk about market sentiment first. So I know this is a technical analysis channel, so I'm going to try and be brief. It's come to my awareness, I should say, about why it is I've been so bloody bullish all this time. You know me, if you follow the channel, you know how much I cover gold, Bitcoin and the stock market primarily. So guess what? That's where most of my exposure is. US equities, gold and Bitcoin. Go and look at the gold chart, go and look at the stock market, go and look at Bitcoin and tell me how well I've done since the bottom in 2022. It's been a nice time. I've had a lot of fun. It's been very enjoyable, right? So what do you think my sentiment's been when you look at those charts? Pretty darn bullish, right? Now, that's all I hear from people sometimes is, Tom, you're too bullish. Tom, you're too bullish. Well, if you'd been having my experience that I've just had for the last 2 years, you'd be bullish too. And I've been bloody struggling with trying to understand why people haven't been, because it's been a mystery to me this whole time. Until one of my members pointed it out to me the other day, the absolute bloody obvious, which I feel like a bit of an idiot for missing, which is that's not the case for a lot of retail this cycle, Tom. You know, institutions this, institutions that, BlackRock this, BlackRock that, but retail has been gambling in this meme coin market. Now for me it was a sideshow, because something crazy going on in the background, right? Just like NFTs was in the last cycle. I didn't touch a single one of them. I still don't get it. I don't get it at all. Some people say it's fine art in digital form. I see a bunch of pictures of monkeys. I don't get it. So I didn't touch it. I didn't touch any of this stuff this time around either. The issuance craze that's been going on. So I wasn't paying it due attention because it was a joke. And what's happened is retail has been massively overexposed to all this crap. And there isn't the liquidity available as there was in prior cycles. You know, prior cycles we had COVID lockdowns followed by $1,500 stimmy checks and 0% interest rates. In the cycle before that we had a market which was nowhere near as diluted, was massively more concentrated in a handful of assets by comparison today, and was also at 0% interest rates. So everybody was buying the right stuff. They may have been buying it by accident, but they were buying it with free money last time, and before that were buying less stuff. This cycle's been very, very different. What's happened is Bitcoin's done what it was always going to do, which we were always speaking about for a long, long time, which is it's separated itself from all the other stuff. And I think that's why altcoin season has been cancelled. Right? As I've been seeing videos about that, sentiment about that. Now it may come back. I'm not saying it's gone forever, but it hasn't arrived, has it? And it's the tighter conditions that we're under, plus the rampant gambling in the coin issuance of tens of thousands of projects which are all garbage, and that's massively diluted the sector. But you haven't seen it here in Bitcoin, you know, but you have seen it in some of the bigger alts, right? And across the broader market it's been a completely different experience. So that's the sentiment I wanted to touch on, because the fear we're witnessing on the fear and greed index at the moment, the bearish sentiment at the moment is mind-blowingly bad. Considering that we're still in an upward trend in Bitcoin, we're still above the highs of March 24 were still above the all-time highs of the prior cycle. I have never ever known sentiment like this while still in such a strong upward trend. I've just never known it to be like this. Now, I have been fighting similar, but nowhere near as bad, similar bearish sentiment in the stock market the whole time since we've been going up. Right? Now, just to be clear, I've been warning about a potential pullback there, and we'll be covering that in another video maybe tomorrow, or maybe it'll be out later today, I don't know. I'll get it done when I can get it done. But I've moved back into roughly between 50 and 60% cash across my portfolios at the moment in anticipation of declines to come. Now, that doesn't mean I think a crash is imminent. I'm just being cautious. I've had my gains over the last couple of years, right? But I am a buyer here in Bitcoin. So the sentiment is extremely bearish. There's an awful lot of fear. And it hasn't been making sense to me until it was explained in that way. Which is everyone's freaking out because they're not having the same experience, right? I think that's just a mistake I've fallen into, a little bit of a trap, because I've been here in the crypto space since 2015, right? And I've been investing long before that. So the way I look at it is I was always exposed to a handful of assets comparatively, and the later you've come in each of these cycles, the more rug pulls, the more scams, the more nonsense has been produced each time, and that has diluted away all of the liquidity, which, if we were honest with ourselves, we would have been better off putting in all of it into Bitcoin. Everyone would have been, right? Everyone would have been, but apparently 60% annualized returns are not good enough for people. But anyway, I digress. It makes sense now, right? That's what I'm saying. It makes sense. So let's have a look at these bearish extremes we've been experiencing at the moment. So we're going to bring up some RSI readings and stuff. So on the daily time frame, if we bring up the MACD for a moment, the bearish momentum we've hit over the last few days is kind of record breaking. We haven't seen extreme bearish momentum like this since May 2021, which is pretty amazing on the daily time frame, that is. And that, it's going back a fair old way, right? Now, if we go and look at the RSI, right, we have reached it. I need to lower it again just a little bit. Right, so we're down to like 16.09 on my own custom RSI. This is using a 10 rather than a 14, but either way, if we bring up the extremes we've seen in the RSI, daily RSI extremes, so we got August 2023 was the last time we were around this extreme. We've had other extremes like June 22, January 22, and May 22, but if we come off of the RSI and have a look at the chart, what do we notice? In the bull market, we've had one other RSI extreme that's this bad. That's how extreme conditions are at the moment. MACD's gone nuts, and the RSI is the second most bearish RSI reading we've had in this entire bull market. To get anywhere near as bad, we have to go into the prior bear market, two lows of the bear market, around January 22 and June 22, and what was essentially the first low before bear bullish divergence into the last swing high of the prior bull market. That's when we last saw these kind of lows. So sentiment is on the floor. Everyone's terrified. RSIs and MACDs are at crazy level extremes that I haven't seen in these kind of circumstances before, really. And that's enough for Tom to want to buy. Putting it simply, that's enough for me to want to have a piece of this. And I will want, if this continues to get worse, I will want a piece of this at prior support. Prior resistance becomes support around 70, and if it comes all the way back, I'll want more of it. Okay, bring it on. Bring it on. If that's what's on the cards, let's go. But I have to be honest, I don't think that's what's on the cards. But since it's the elephant in the room, let's talk about it first. Let's deal with the big, scary, bearish idea first, right? Because it's what most of social media have already said is happening. So the bearish count, coming off of the lows in 2022. Let's frame it inside of a simple long-term count for a moment. And let's just hide these pitchforks so they're not creating a mess. Okay, so a series of 1s and 2s. That's cycle, super cycle, primary, and now what would be intermediate degree. I can't think, from a bearish point of view, a better explanation than this count. This is the cleanest by far in terms of bearish explanations. It just makes the most sense. The sentiment we're experiencing at the moment could be synonymous with another wave too. If you are familiar with Elliott wave and you want to learn about wave personality, there's a segment in the book by Frost and Pretcher. There's also on my Discord, on my Patreon, a video all about Elliott wave personality and the sentiment that we experience in each of the waves. And this does have a very wave 2 feel to it. Wave 2s are the most depressing, the most fearful, the most volatile, and the most ground shaking of experiences, where everyone is just jumping out of windows, spiritually at least, and that's how it feels at the moment, right? So maybe this is a wave 2. Well, if it is, we've had 1 and 2, 3 and 4, 5 minor waves up into what is now intermediate degree, inside of primary, inside of cycle, inside of super cycle. So where could it end? Well, just about anywhere really. Let's bring up some potential guides. So, new bear market. Forgetting about the Elliott wave count, we know this is now a 1 if we're talking about a bearish count. First major support is, I've got it as 71754, but it's anywhere in this region, right? All the buying, all of the demand in here, right? Loads of it. So, big old demand zone in here. And well, this goes all the way down to the pivot at 49577. Okay, which is that August 24 low. So we could find, I'm not sure we'll get there now in terms of in the next few days, because we're so oversold that I think a bounce is inevitable. We are going to bounce. Whether we do it and go sideways and then come lower and find our way down to these levels, or whether we just bounce from here and go higher, as some of our other accounts will attest to. But either way, here's a big fat demand zone down there, right? So the first major support is the prior resistance levels, and that's all of these highs, all of these highs, and all of these highs here, which could easily get tested if we come into this zone. The support here, as you can see from the visual range volume profile, there's huge support in here, right? If we come into here, we are going to bounce from it. Whether we come down here now, whether we come down here in a few weeks' time, we are going to bounce from here. Now, it might be, if it's a broader, bigger, longer, scarier correction, a new bear market, it may be a bounce before we come back and break our way through all of this. So if we do come down through this first major support, we test it, we bounce, we fall through it, where's the next stop? Well, we've got that major pivot at 49577, but if this breaks, 49577, then the upward trend of higher highs and higher lows, which is the actual bull market since the low of 2022, is broken. Okay, so at that point we can take it as confirmation per se that we are in a bigger, deeper, more likely confirmed wave 2 at a higher degree. So the idea of this being intermediate 1 and 2 is most likely correct at that point, and therefore we can expect even lower pricing to come. So if that's the case and we push our way through that, there is some minor support around the 50% fib, around 40,967. We could find support here, plus there's prior highs to sit on back here, so worthwhile pointing out that support level, right? Prior lows becoming support, becoming resistance, becoming support. So worth noting that as well. So I'll add that little level to the chart here. 180. Makes you wonder, doesn't it? I mean, if altcoins weren't dead already, where are they going to be if this plays out? Hopefully permanently fucking dead and done with. Pardon my language. And I'm sorry, I'm not trying to hurt anyone's feelings. If you're holding this stuff, I've been there, done it. We've all done it in different markets at different times, whether it's bloody tech bubble, GFC, AI craze recently, crypto, you name it. Everyone's done it at some point. Everyone ends up holding it. Okay, it's just part of the learning process. But let's say we come smashing through that support. Well, we've got the 78, 61.8 and 65% golden zone down here back at major support. This is the first big move off of the prior low, the 1 and the 2. Often the case, if we're going to do a larger wave 2, we're going to come back and retrace all our way back to when we roughly began, but not beyond it. So in this case, we wouldn't fall back below 15,374, we would stop before then. The next major support, though, prior to getting there, long before getting there, would be at 31,035. And that would be right in the golden zone. So there's your worst case scenario, guys. There's your bearish count. Right? And we could stop at any time. Right? The 2 doesn't have to be as big and as scary as the prior wave, because this was primary, that was cycle, and that was super cycle. This intermediate degree could be significantly smaller in time frame. It could be big, but it could be significantly smaller. Both are possible. Right, let's just move this across to new bear market folder. Okay, so yeah, there you go. We'll pull it here at first, around with the wave 2 potentially around here. Although I think this would have to be a smaller wave 2 within another count to stop at 70,000. So let's just be bearish and say solid down here then. Right, we're going to have a big old scary retracement of an A, B and C down to here. Just like all the other prize sharps we've seen. Right, and we'll put that in there into the bear count. So there you go, we dealt with the elephant in the room. If it is a new bear market, we will be going a lot lower. But we will be getting confirmation of it, and I know it's a long way away, but that's how bullish we've been. We will not be getting confirmation of it from a technical point of view until we clear 49577. Because until we break that August 24 low, we're still in an upward trend. We're still in an upward trend. So on that note, let's talk about that. Let's bring up our exponential moving averages here. We are currently testing the 250 exponential moving average on the daily time frame. This is synonymous with larger wave degree pullbacks within an upward trend. So here, here, and now here. Now we came just below it here, and we spiked quite nastily through it here. At the moment, we're just wicking through, right? But it could get worse, and it could take a while, as you've seen, right? But for the moment, this has been synonymous. These conditions that we've pointed out, the prior bearish conditions in the daily RSI extremes, like back here, are synonymous with finding lows. Okay, so for the moment, we've come back to the 250. We've breached it as we have before, and we're still in a series of highs, higher lows, higher highs, higher lows, higher highs, and higher lows, and that is intact all the way down to 49, whatever the fuck it was. Right, so that's what's zooming out. The benefit of just zooming out for a bit and realizing that this pullback is no different from anything else we've experienced before. Sentiment's more extreme in many cases, but it's a 27% pullback. Let's come and have a look at what this one was. What was this one? This one was 32% pullback. Sentiment was very different during this. There was a lot. I was fighting bears the whole bloody time. You go back and watch the videos. I was fighting bears the whole time, right? Who were calling for the end of days, but then we did this. It's just the norm. It's just the norm, guys. Some people just can't help themselves. What was this back here? 31%. That's during the last cycle, and that's quite late on in the cycle as well. Now that's nothing next to the wave 4, which was 56% before we made a new all-time high. Yes, I know I'm flogging a dead horse, but I'm just making the bloody point. Wave 2 was a 72% correction and still in an upward trend. Right, what about the 2017 market? These are teeny tiny little pullbacks, right? This is nothing to write home about. Look at the massive move up. That's what, a couple of percent? No, guys, it wasn't. Right? This was 38%. Right? So just putting things back into perspective, right? We are trading historically a 70 vol, 80 vol asset. That's the kind of swings we're talking about, and we're witnessing one now. So just keep your hair on, okay? I've lost mine years ago, but you keep yours on, all right? Because we're still in an upward trend. Now, Here we go. Tom's being super bullish again. Look, I've dealt with the bearish case. I'm open to it. I've countered it. It could happen. And fucking bring it on if it's going to happen. Alright? I'm just talking facts now. We are in an upward trend. We are higher highs and higher lows. And we've got a long way until that breaks. Okay? So now that we've discussed that, and we can see how extreme conditions have got, but within this upward trend we can now talk about some of the bullish interpretations. So we've gone from uber bearish, let's go all the way to the other side now and talk about uber bullish. And this is probably going to get a few laughs, because obviously when people think the sky's falling, if someone turns around and says no it's not, everything's groovy, you're probably going to get laughed at. But let's have a look. So wave 3 extension, let's come down to the 8 hour. This is as bullish as it can humanly get. Okay, this is off the chain bullish, and this is 1 and 2, 1 and 2 and 1 and now 2. Don't know if this is done yet, maybe coming back to 70,000 and then we're off again. And this is now wave 3 at minute degree. Once we've completed 2, we will be into wave 3 at minute degree, within wave 3 at minor degree, within wave 3 at intermediate degree, within wave 3 at primary degree, within wave 3 at cycle degree, within wave 3 at super cycle degree, and so on and so forth. For free. Right? And we will be tracking this long-term pitchfork of that cycle and super cycle degree all the way to the moon and beyond. Right? Buck Rogers, Buzz Lightyear, here we go. Right, stupendously bullish. Right. I know no one's going to believe that, given the sentiments on the floor at the moment, but believe me, it's possible. Now, that's one idea. Let's now have a look at the alternate idea. Okay, this is another wave 2, but it's at a minor degree wave 2. Rather than intermediate degree wave 2 as in the bearish count, or at minute wave 2 in the super bullish count. But what I will attest to is that I do believe it is likely a wave 2 of some sort. Why? Sentiment fits. If you don't know Elliott wave, you could buy the book by Frost and Pretcher, which I recommend everyone do. There's a sentiment there about wave and market personality and how the market behaviour and sentiment will be during those periods. I've got a video about it that I put on my Discord and available on the Patreon if you sign up. And wave 2s are the most depressive wave. It's where everyone's in their most greatest state of panic, greatest state of fear, and is in their most bearish mindset, and that's when we find the bottom in a wave 2. So what we need to do is, I know it's a bit messy, so we're just going to tidy this up a little bit, bring up a simple version of it. Right, here we go. Simplified version is we are in primary wave 3 of the long term count. That's been the same, that's been my argument for the whole time, right? But my problem has been trying to get it to finish in such a way that there will be room for the wave 4 to complete. So what am I talking about now? We're going to have to come out to the weekly time frame for this one. Right. So as you can see, we're just going higher over the long term, year after year, right? If this is 1 into 2, this is now 3. 3 has to complete so high up, high enough up, that there's room for the 4 to come back and retrace in a vol 70, vol 80 market as we're in, and not come back within the wave 1 territory, because it can't legally. Right. So at the moment, I don't think that we could be done and still within a wave 3, primary wave 3. So 1, 2, 3, 4, 5. This is now wave 3. There's not enough room for this to be wave 4. Right. So what's the explanation? Well, it's either the big bear market, like we were talking about, it's either the super extension, like we were talking about, or it's a wave 5 extension within the third. And that's what we're going to talk about here for a moment. So we've gone 1 and 2, 1 degree less than primary into intermediate, 1 into 2. We've done 3 and 4 at intermediate, but this isn't 5 up here. Right, this is a extended wave of the 5th. So here's the 5th now, and this goes 1, 2 at minor degree, 3, 4 and 5. and off we go higher. Now you can ignore this invalidation point because that's a long, that's for the wave 4 coming back into the wave 1 at primary degree. It's got nothing to do with this shorter term count. This count, once again, does not get invalidated until we come back beyond that pivot, all important pivot at 49577. Right, a lot of things you would have noticed already switch off right there. A lot of bullish hopes and bullish possibilities just switch off when we get through that level. In fact, I would argue that any bullish continuation is dead at that point. We are in a confirmed bear market, and that's that. So, but while we're in this upward trend, this is still possible as well. 1, 2, 3, 4, 1, 2, 3, 4, 5. This will have us probably finish around when we would expect to in the Bitcoin primer, which you can find on my channel. Which will be around between September and November this year. Maybe a bit earlier, August through to, I know it's a bit of a broad window, August through to November. Right, and that'll be 3, 4 and 5 up into here, and then we'll be done. And then we'll have the wave 4 correct down. So, there you go. That's essentially the only counts I can see at the moment. So let's just recap before we come into the smaller time frame and have a look at how we can interpret what's going on over the shorter term. So we've got super bear, right? We've done 5 up into 1. We are doing another wave degree 2, right? A intermediate wave 2 of 1 degree lower than the primary degree back here. So we've got 1 and we've got another bear market to endure. Another bear market to endure. Each one has been smaller than the prior one. We've gone from 90% to 80% to 70%. This might be 60, this might be 70 something, but either way, it's going to be a steep one. It's going to be scary, but it's going to be over in less time than the prior ones, and then we'll be off to new all-time. And then we'll be off to new all-time highs in the 3 over 3 over 3. Then, right? So this is the one where we get confirmation of this once all of the bullish counts die at that prior pivot back in August 24. We go through that, and it's most likely this. I'll give you 80% because I never give more than that odds that it's this if that happens. Alright, and we've spoken about the levels we could come to. After that, we've got this idea invalidated at 49647, but very likely to find support around that prior structure. You know, where we had all of our support and resistance. That prior resistance will become support in that prior correction here around 70,000 region. And this is 1, 2, 1, 2, 1, 2 again, and this is stupidly bullish. 3 or 3 or 3 or 3 to come. This is what maybe some people are calling a super cycle, inverted commas. I hate hearing that because the word super cycle in Elliott wave is a wave degree that we use. For other people it means something else. It's a fancy word, but whatever. I guess that would be an explanation for what they're calling it. Then we've got this idea. 1, 2, 3, 4 done. Now we're getting an extended blow off fifth. Quite typical in crypto markets. In previous cycles, that autumn phase, that blow off fifth. We might be doing that now. So on that note, let's now come into a small time frame. Let's see what we can see. It's a wee bit messy in here because I've got so many things I'm working on at the moment. So we're going to tidy it up a little bit. So now dealing with the short term counts. We are going to hide that. I'm going to hide this pitchfork, although it's a beautiful touch on it at the moment. And we're going to talk about the possibilities over the shorter time frame. It is a wee bit messy in here, isn't it? So what happens when you're throwing extra detail onto the chart? When you're working and you don't prep for its use during an actual video. So that's one mistake I've made here. There we go. So here's a 3, here's a 4, here's a 1, here's a 2. It could be done already. Sentiment's extreme enough for it to be. But it is also often the case that once we've made a low, we want bullish divergence to occur between this low and the lower low to occur. So we're going to push the 5 out for a minute and suggest that maybe it's got to come a bit lower. Now the target zone down here is just based on the on the linear 50 to 61.8% retracement. Okay, that we will just come back into this territory. Now we don't have to do it. right? We can stop before there, all right? And we may do, but for the meantime, we are in a downward trend of lower lows and lower highs over the short term, and I've got it as a 1 and a 2, 1 and a 2, 3 and a 4, 3 and a 4, and now we're coming down in the fifth. Fifth could be done at any moment. It's gone beyond the length of the 3, so it could be done at any time, and then we will eventually bounce out of here. A, B, C done. There's the 2. Off we go. Now into a minor 3. Or into a minute 3 if you support the bullish extension. It's all the same. It's 1, 2 here, and off we go higher. Now, from that point, that's one count. I've counted this as a leading expanding diagonal in the A sideways combination, because I can't call it a zigzag because it doesn't go A, B, C with the C going higher. I can't make it a triangle. It's a fucking mess. Pardon my language. It's just a nightmare. But I see a zigzag in the W. I see some kind of multi-zigzag in the X, and then I see a flat in the Y. But it's just whatever. Then we come down in an impulse. So we got a diagonal in the A, and it's messy. And then we come down in an impulse. Okay, so the same idea as that 1 into 2 at minor degree is the exact same idea for that wave extension, of wave 3 extension, but this is minute, so this is 1 degree less, but in a much more bullish count. 1 into 2 again. Same shit I just said, exactly the same. It could bottom anytime now. This is 5 down in the C, and then we could rally from here. Excuse me, the Discord going off. I'm sure you're probably checking yours now, but let me just exit that so it doesn't cause any more confusion. So, 1 into 2 or 1 into 2, brilliant. Or bearish, the super bearish count on the smaller time frame is 1 but into a much bigger 2. So this would be A, B, C. I've got into a W, A, B, C again, coming much lower, taking out that bull market pivot on the August 24 low, which I think would be a necessity to confirm a bear market, right? Which is a long way away, I know, but it's just what happens after the bond market's gone so far. Now those are the counts on the long-term transfer to the shorter time frame, but there are a couple of alternative ideas. I know there's a lot to cover here. And that's this, that we're still 1, 2, 3, 4 on the smaller time frame. This is less likely now. This is less likely because we've gone through the 23.6 to 38.2. We haven't backtested the base channel. It hasn't held support. We've come to the median line and we've come almost 50%. But it is still legal. This does not invalidate until 62729. Now you can plug this count into either of the bullish counts, because this could be 1, 2, 3, 4, 5 in a broader 1. This could be 1, 2, 3, 4, 5 into 1, 2, 3, 4, 5 within an extension. This could be 1, 2, 3, 4, 5 done to the highs. Alright, it plugs into all of them. I just don't prefer it anymore because it's come too deep for a wave 4. Not too deep to be legal, just a little too deep to be believable. Then we can look at this as another 1 and 2 again, but that's the exact same idea, but instead of counting it as a zigzag down, I'm looking at it as a flat. A, B, expanding diag into a flat. Okay? And that's all the short-term counts. I hope that makes sense. So we will just have a quick summing up. Right, so we've got our wave 3 extension count. This is 1 into 2 as a zigzag. And we could plug into this, instead of 1 into 2 as a zigzag, we could plug in the idea that it's 1 into 2 as a flat. Right, but it's still 1 and 2. Okay, same idea, just expressed slightly differently. We then have the alternate idea, which is this 1 into 2 as a zigzag at minor degree within the fifth wave extension. 1 and 2 again, right? And that could also be expressed as a flat. Okay, then we have the bearish count, which is we're just going to go lower and lower and lower. Okay, we will rally, but we will just go lower, lower and lower over time. Then we've got one wild card, which is that we've still got 1, 2, and 3, and 4, and this is just a deep flat and a 4 before we go higher in the fifth and final wave. I give that lower probability of being the case now. One thing I want to point out is the likely price action. How the market will likely want to behave from here. So we can see this point of control here, right, on the visual range volume profile, as we come through this void in the VRVP, right, which is all this thin trading here. We're stopping in the middle of nowhere at the moment, but we're stopping probably because we're just massively oversold. Right, we don't have to come and test this support, but if we come deeper, we will want to come down here to test the support. If the price wants to come lower, it will test this region here, this point of control, and it will come down lower. It doesn't have to do it straight away. Right, we've got what is not a very good looking, but it is a potential head and shoulder structure here, and we are either going to come up to it once we bounce and then get rejected down to here. Okay, we're either going to continue down from now and it's just going to be a meltdown, or we're going to come up to it, likely find resistance, come through it, reclaim it, and then move higher. From a classical analysis point of view of market structure, there's major resistance at that neckline. Major resistance. We either come up and reclaim it as support, right, or we get rejected. That's if we bounce from here. If we don't bounce from here, the next major support, as we covered in our new bear market idea, is here around the 71,000 region. I doubt we can make it in one go. We'd have to shuffle sideways for a bit and then make a collapse. I lean towards it bouncing, to be honest, though. I lean towards it bouncing and coming back to resistance because it's so oversold. It's just getting wrecked at the moment. Alright then, guys, I think we'll leave it there. To sum up, we are still in the bull market. Macro, big time style is still in the bull market. We are a long way from breaking it. We've got to get through 50 grand before we break it. Right? I know things are scary. I know things are bad. But it's when things are like this, right, that opportunity tends to knock. Okay, now that's not an endorsement. I'm just saying. Alright, so keep your chin up. Don't panic. And just watch these levels. I'll be back with you again in another week's time or so. And if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you haven't joined the Patreon yet, consider doing so. It's only 10 quid a month and you can join, get access to everything that's ever been produced, and then you can leave if you want. It's up to you. Go and learn Elliott wave there, go and learn some technical analysis, maybe join a live stream or two. But either way, feel free. And if you're not following me on Twitter yet, feel free to do so as well. I will try and remember to upload this video to it. Take care of yourselves, guys. Keep your head screwed on. And I'll be back with you as soon as I can. All the best. Bye-bye.